Good afternoon. This is Espinor Jr. with Century 21 Select Real Estate of Stockton with my special guest today, Alex Pallios of Scenic Oaks Funding. Good afternoon, Alex.
Good afternoon, Al. Thank you for having me.
It's been a while.
It has been too long. Too long.
But
We'll have to
we're
do this
back.
more
We're
often.
back with a vengeance.
Yes, sir.
Well, Alex, pleasure to always have you. Tell us a little bit about this new loan program.
Yeah, go ahead if you want to pull that up on the screen, Al.
I sure
I'll
will.
touch on the
That is
bullet points
pulling
of it.
up. Go ahead.
Basically, what this is, so this is a conventional loan product. All right. And it's a census tract or community lending product, you could say. Now, what that means is certain areas are eligible, others are not. It's basically to incentivize lending in specific areas. Most of Stockton qualifies, all of Merced for the most part, all of Ceres, parts of Turlock, parts of Modesto. It's all case by case. So we just have to run it through a system to see if a property qualifies or not. But basically what this is it's no different from any other conventional offer. You're not necessarily going to have anything in your offer that you write in that would be any different from just a regular conventional offer, because it's simply just a conventional loan, you could say. Don't have to be a first-time home buyer. Do not have to meet certain income requirements or anything like that we see, especially with a lot of down payment assistance programs. But what is the advantage, right? Usually rates about 1% lower than going conventional rates for that day. So if you're going conventional rates around 7.5, whatever it may be, you're usually going to see rates with this program around 6.5, higher sixes, lower sixes, just all depending on someone's credit score and down payment, just like any other conventional loan. Obviously, in a high interest rate environment like we're in now, any little bit helps, and this can actually make a really big difference in someone's monthly payment. Every $400,000 that's financed, I want to say it's about $200 to $250 a month for every 1% increase in rate. So saving 1% on that rate, you're probably looking at cost savings of $200 to $250 a month for every $400,000 that's financed. So huge, huge benefit.
Yes. Yes.
All just depends, like I said, on the property. So if someone's looking at a specific property and they're curious if it qualifies or not, or if an agent has a listing and they're curious if they're not getting a lot of movement on it, always happy to just run it through the system. It's very quick for me to do and see if it qualifies for this loan product.
That's great, Alex. And I see here, so the minimum FICO score is 620, correct?
Yes, sir. Yes, sir.
Okay.
Takes into account down payment and all that stuff, just like a regular conventional loan. But always worth looking into. Even someone's at a 640 or 660 score, whatever it may be, see if we can make it work with this.
Got it. And then, of course, the eligible property types I see are 1 units, condos, plan unit developments, and 2 to 4 units.
Yep, just like any other basically conventional loan. For the
That's great. And
has to be owner occupied. Can't buy a investment property or second home with it. But and even teeing this up for down the road, if you happen to buy a property in one of these eligible areas, the pricing for someone doing whether it's a cash out refinance or a rate and term refinance, those rates are also about 1% lower. So not only are you going to have that cost benefit now, once we get into an environment where rates are lower, basically anyone that's buying right now, we're having that conversation that although this is a 30-year fixed loan, you're probably not going to be in it for 30 years, right? Rates are eventually going to be lower than they are today. That's where we would take a look at things and see what we could do to lower your payment.
No, and that's fantastic, Alex, because I think right now the main concern, and I hear this every day when I talk to, people that are interested or thinking about buying real estate, is obviously they're holding off because of the rates. But what they don't realize is that more, just as important as the rates is finding the house, because the other side of the, the equation is that we still don't have inventory. Why don't we have inventory? Because if somebody already had an interest rate at 2%, 3 or 4, they're not motivated to sell unless they have to, unless they have to for a job or a change of lifestyle, or one of life's events, death, divorce. That's the only reason that somebody would sell in this environment. But to also point out the positive, if you're a seller, your values haven't dropped. You're not
at all
making a huge gain in equity like the last 2 years between 2020 21 during COVID, but at the same time you're not losing money. And so when we have these conversations with people, it's really important to keep everything in perspective. If you can find the house that you want, focus more on that and, utilize these tools like what Alex is offering through Scenic Oaks Funding to, kind of work with the rate, kind of make it work. And eventually rates go up, they come down. We know that. We have the historical data to back it up. We know that back in the 1980s, this isn't the worst. Back in the 1980s, people were paying 12 and 15% rates. My folks, I mean, I can think back, to that time. And, even when I bought my first house in 2000, my rate was what, 7.25. So, it's everything is in perspective, right?
It is. And I think, it's hard to I don't blame people right now. If you have a 2% rate, you don't hate your home. It's hard to justify moving just because, and then having a 6 or 7% rate. I think we might hopefully see some more inventory. If rates can get down to 5% in the near future, that spread isn't going to be so large as it is now. And hopefully you'll see more listings come on the market with that.
So what would your advice be right now to a first-time home buyer, that hasn't been through this process, that's kind of sitting on the fence right now because of the fear of rates? What would be your advice, Alex?
It's all about the payment. Whether the rate is 50% or 1%, it all comes down to that monthly payment. Obviously, you don't want to be overstretched. That's why there's lending guidelines and things in place to make sure that, your income can physically support that payment. But on top of that, just because you qualify for something, you still have to make sure that you are okay with that payment. And just in the back of your head, knowing that probably won't be your payment for the next 30 years. So it's all about going over numbers. It's all about dialing in what price range is going to offer you that monthly payment that you're okay with. And if you're okay with the payment, you're okay with the property, you're going to see a lot of gains, more than likely in equity when rates do come down. You don't have to go out and wait for that time because we don't know when that will be, hopefully sooner rather than later. But then you're going to be in a position where you own your home, could take advantage of lower rates, and then see any gains in equity that we may see when rates come down.
And that's another thing too that's interesting to point out and people forget. Right now, obviously demand's down because of higher rates, correct? But we also know that when rates begin to drop, then the demand increases, right? And then
100%.
That's what that leads for the potential of, building up even more equity, because obviously when rates are low, you have more buyers, you have more competition, pushes up price. We already learned that through the last 2 years before, 3 years now.
Yeah.
And so we know that to be true, but it's like, it's a question. No one has a crystal ball. No one knows exactly when it's going to happen, but we know that sooner or later it will happen, just like everything else, this storm shall pass, as they say.
Yep.
And so, be ready, be in a position. But I think you're right. The focus is, can you afford the payment? As long as you're comfortable with the payment, that is the main focus. And then finding the right house that you want. Obviously you're not going to get the house of your dreams. Your first home might, just be a starter home, but at least get your foot in the door, right?
Yeah, and it's rare that someone buys their dream home as their first home.
Yes.
It's a step up process. This first home, you might look at it as somewhere where you're going to live for the next few years, 5 years, 10, whatever it may be. Probably isn't going to be your last home if it's your first. And it's stepping stones, because it's very hard to just get to your dream home right off the bat.
Correct. Well, Alex, thank you so much for your time and sharing this community lending program through Scenic Oaks Funding. If you could look at the screen on the bottom, Alex's information is right there. You want to reach Alex? What's that number, Alex?
209-202-0600. And if you have buyers that are looking, that are just beat up over the rates, or a listing and you're curious if if it's been sitting there and you're trying to get some action or movement on it, maybe this is something that could make someone justify it.
And one thing I can say about you, Alex, is that Alex offers very good customer service, very good follow-up. I've had testimonials from several past clients that, will say Alex did everything above and beyond to make sure that we get the job done, get the deal closed, get those keys in our buyers' hands, right, Alex?
100%. I appreciate that, Al. So that's what it comes down to. Anyone can do a loan. It's all about the service you provide.
Exactly. Well, Alex, thank you so much for your time. We will be in touch with more segments with Alex Espinor and Alex Pallios, and we'll give you more updates on real estate market, and what we're doing with these loan programs. Okay.
sir. I
Thank you,
appreciate it all.
Alex. Have a great day.